I look for broken. I look for things that lenders own. I look for things that are poorly managed. I look for things with upside. That simple philosophy has built fortunes. Think about a vacant building you've driven past 100 times. Windows dusty, parking lot empty, maybe weeds growing through cracks in the pavement. That building is broken, somebody owns it. Taxes are being paid. Insurance is being paid. Maybe even a mortgage is being paid. But no rent is coming in. That's opportunity. Sometimes fixing something is as simple as finding a tenant. Sometimes it's a full operational overhaul. But once it's fixed, once it's producing cash flow, you refinance it, pull your original capital back out, and you still own the asset. That's the idea of an infinite return. Let me take you back. When I left the Marine Corps in 1974, my poor dad told me to get a PhD and fly for the airlines. That's what many of my fellow pilots were doing. It was safe, predictable, respected, but I didn't want safe. I didn't want predictable. So I asked my rich dad, what should I do? He said, if you want to be an entrepreneur, you'd better understand real estate. I didn't get it at first. I thought investing meant stocks, bonds, mutual funds, a 401 ka. But rich dad said, real estate, gold, and silver are the foundation of wealth. So I took a small real estate investment course in Honolulu. My big question was this: how do you buy real estate with nothing down and still make money? That was the challenge. Eventually, I bought my first property on the island of Maui. 1 bedroom, 1 bath, close to the ocean. I put nothing down. I used my credit card for the down payment, 100% debt financing. And after expenses, I made $25. Now, $25 doesn't sound like much, but here's the key. I had none of my own money in the deal. That's an infinite return. From that point on, I was hooked. Over the years, I've invested in real estate around the world. I've seen booms and busts. I've seen fortunes made and lost. And one of the smartest people I ever met in this business is my good friend, Ken McElroy. We've been friends for over 30 years. We've traveled the world teaching real estate. We've laughed, gotten into trouble, and built serious wealth. And what made Ken different from the beginning was this: he didn't flip. Why Ken does not flip? When I first met Ken, flipping properties was the hot trend. Buy a house, fix it, sell it, take the profit, pay short-term capital gains tax. But Ken said something that caught my attention. I don't flip. I go for the infinite return. That's when I knew he understood the game. If it takes you months or years to find a great property, why would you sell it? Ken's background was in property management. In college, he managed apartments in exchange for free rent. He collected checks, reviewed expenses, coded bills, understood cash flow. He wasn't learning theory, he was learning operations. And one day, as he handed rent checks to the property owner, he had his moment of clarity, and I am on the wrong side of the desk. That's when he decided to become the investor instead of the manager. Today, Ken owns thousands of apartment units and runs a company with hundreds of employees. But it started with understanding operations, understanding how to fix what's broken. Infinite return is simple in concept, but powerful in execution. You own a cash-flowing asset with none of your own capital left in it. Here's how it works. Find a broken property. Buy it below market value. Fix operations. Increase income. Refinance based on the higher value. Pull your original capital out. Keep the property. Now you still own the asset. It still produces cash flow, but your money is back in your pocket. You can redeploy it into the next deal. That's velocity of money. I once visited a property with Ken in San Antonio. It looked like a shipwreck. We jokingly called it the Titanic. It was about 300 units, roughly 50% vacant, copper wiring ripped out, toilets sitting in the middle of living rooms, walls opened up. Most investors would run. Ken looked at his construction guy and said, "No big deal." Why? Because he saw beyond the mess. He saw the future value. The bank owned the note. They had a problem. Ken negotiated to buy it around $20 million. He put about $7.5 million into renovations and stabilization. Within 2 years, the property appraised at over $40 million. At that point, he refinanced, pulled the original capital out. Investors got their money back, and everyone stayed in the deal. Now the property produces ongoing cash flow without original capital at risk. That's infinite. Sometimes it's not even dramatic. Ken once added washing machines and dryers to units. That allowed him to increase rent. The added rent covered the cost of the equipment and improved overall property value. Small operational improvements can dramatically impact net operating income, NOI. And here's the magic formula. Higher NOI times market cap rate equals higher property value. Increase income, increase value. That's the game. Does the Fed matter? People obsess over the Federal Reserve, interest rates, quarter point changes, headlines. Yes, interest rates matter, but they are just a cost like electricity, water, or insurance. If you focus on cash flow, you can survive rate cycles. If rates drop, you refinance. If rates rise and you locked in fixed debt, you're protected. Real estate is slow-moving. The Fed is slow-moving. Successful investors focus on fundamentals. Does it cash flow? Can it be improved? Is there upside? Most beginners look at 1 or 2 deals and quit. Professionals review hundreds. Ken has an investment committee. They review dozens of deals weekly. Underwrite aggressively. Make offers selectively. Out of hundreds reviewed, maybe 1 closes. That's discipline. When I first struggled finding deals, my rich dad said, "You haven't looked at enough." He was right. Opportunity favors effort. Wall Street wants your money. Banks, pension funds, insurance companies, they use your capital to invest in assets. You become the product. When I wrote Rich Dad Poor Dad, my mission was to wake up Main Street, to show people they could be owners, not just savers. You can use Wall Street as a tool, but don't let it use you. If you blindly fund a 401k for 40 years and hope it works out, that's not investing. That's outsourcing your future. Financial education gives you options. One of the biggest advantages Ken and I have had is access to rooms full of smart investors. That's why Ken hosts the Limitless Expo each year in Scottsdale, Arizona. Thousands attend. Dozens of real operators speak. Not influencers, not theorists, real investors. You meet partners, you hear strategies, you sharpen your thinking. Education doesn't stop after college. In fact, real education often begins after college. Most people wait for certainty before they move. But certainty never comes. There will always be headlines, elections, rate hikes, recessions, and predictions of doom. The disciplined investor understands that uncertainty is normal. It's the price of admission. Focus on fundamentals. Focus on fundamentals. Focus on value. Focus on solving real problems for real people. Housing, for example, will always be needed. When you provide clean, safe, affordable places for people to live, you're not just investing, you're creating value in society. Wealth built on value lasts. Stay patient. Stay educated. Keep reviewing deals, and when the right opportunity appears, move with confidence. And let me leave you with this. In every market cycle, boom or bust, there are 2 kinds of people: those who panic and those who prepare. When markets crash, amateurs freeze. Professionals go shopping. In 2008, while headlines screamed collapse, seasoned real estate investors were quietly buying from distressed banks. They weren't guessing. They were analyzing cash flow, debt terms, and long-term demand. Wealth is rarely built in comfort. It's built in correction. If you train yourself to see opportunity where others see fear, you step into a different league. You stop reacting to news and start responding to numbers. The formula doesn't change. Buy right. Improve operations. Increase income. Refinance wisely. Hold long-term. Repeat. That's how portfolios grow. That's how passive income compounds. That's how financial freedom becomes real, not theoretical. And remember, infinite returns don't start with money. They start with mindset, discipline, and the courage to act when others hesitate. We are not recommending anything. We are a financial education company. Debt is powerful, but it can destroy you if misused. Infinite returns come from understanding cash flow, operations, debt structure, tax, strategy, risk management. The biggest investment you can make isn't in property. It's in the 6 inches between your ears. That's where infinite returns begin. And that's also where infinite losses start. If you're serious about wealth, study, practice, make small mistakes, learn from operators, build experience. Because in a world of financial uncertainty, financial education is your greatest asset. We'll see you next time.